Have you ever seen a stock or crypto just shoot for the moon, and you felt this intense urge to jump in, even though you hadn't planned to? That feeling, that panic, that little voice screaming, "Don't miss out." That's FOMO, the fear of missing out. It's one of the most powerful and destructive emotions a trader can experience. Today, we're going to dive deep into what FOMO is, why it's so dangerous in trading, and most importantly, how you can conquer it to become a more disciplined and profitable trader. So, what exactly is FOMO? In the context of trading, it has the anxiety you feel when you see others making huge profits on a trade you read not in. You see a stock chart going vertical. You see social media buzzing, and suddenly, your carefully crafted trading plan goes out the window. All you can think about is the potential gains you're leaving on the table. It's a primal, emotional response. Our brains are hardwired to want what others have, especially when it seems like they're succeeding effortlessly. This isn't just a trading problem. It's a human problem, amplified by the high-stakes, fast-paced world of financial markets. Let's break down the psychology. When we see a hot stock, our brain's reward system kicks into high gear. We start imagining the profits, the thrill of a big win. This emotional rush can easily overpower our logical, analytical side, the part of our brain responsible for risk management and strategy. Instead of analyzing the fundamentals or the technical setup, we're driven by pure emotion. We start justifying our impulse. We tell ourselves, this time is different, or it's clearly going higher. I can't lose. This is your brain playing tricks on you, creating a narrative to support an emotional decision. It's a cognitive bias known as confirmation bias, where you seek out information that confirms your pre-existing desire to buy. So why is this so incredibly dangerous for your trading accounts? First and foremost, FOMO leads to impulsive, unplanned trades. Successful trading is all about discipline and following a well-defined plan. You should have clear entry points, exit points for taking profit, and most crucially, a stop loss to protect your capital. When FOMO takes over, all of that is forgotten. You jump in without a plan, often buying at the worst possible time. Think about it. When a stock has already made a massive move and everyone is talking about it, who is left to buy? Usually, by the time the hype reaches its peak, the smart money, the early investors and institutions are already starting to sell their positions to the wave of retail traders driven by FOMO. This means you are often buying at or near the top, just before a sharp reversal. You become what they call exit liquidity. This leads to the classic pattern of buying high and selling low in a panic, which is the exact opposite of what you want to do. Let's look at a classic example. Imagine a new cryptocurrency that suddenly gets a ton of media attention. It doubles in value in a day. Your friends are talking about it. You see influencers on social media showing off their massive gains. The FOMO starts to build. You ignore your strategy of only investing in well-established projects and throw a significant amount of money into this new coin right at its peak. The next day, the hype dies down. Early investors cash out, and the price plummets. You're left holding a heavy bag, having bought at the top out of fear of missing the party. This single emotional decision can wipe out weeks or even months of carefully earned profits. It's a painful lesson that countless traders have had to learn the hard way. Another major danger is over-levering and abandoning risk management. In the heat of the moment, you might think, this is a sure thing, I should go all in. You might risk a much larger percentage of your account than you normally would, or use excessive leverage to maximize your potential gains. This is like playing with fire. A small move against you can result in a catastrophic loss. A single FOMO-driven trade that goes wrong can blow up your entire account, taking you out of the game completely. Remember, the #1 rule of trading is capital preservation. You can't make money if you have no money left to trade with. So, the big question is, how do we fight this powerful emotional enemy? How do we conquer FOMO? The first and most critical step is developing a solid trading plan and committing to it with unwavering discipline. Your plan is your fortress against emotional decisions. It must clearly define what you trade, why you trade it, your exact entry criteria, your price targets for taking profit, and your stop-loss level. Before you even think about entering a trade, it must meet all the criteria of your plan. If a hot stock doesn't fit your setup, you don't trade it. Period. No exceptions. Write your plan down. Keep it on your desk. and review it before every single trading session. This turns trading from a reactive, emotional activity into a proactive, business-like process. Second, you need to accept that you will miss out on trades. This is a crucial mindset shift. There are thousands of trading opportunities every single day. You cannot and will not catch them all. It's impossible. Trying to do so will only lead to stress, burnout, and poor decisions. The goal isn't to catch every move. The goal is to consistently execute your specific strategy for a positive return over time. Celebrate the trades, you asterisk, DID and single quotes D asterisk. Take because they didn't meet your criteria. That's a sign of discipline, which is far more valuable than a lucky win. Remind yourself that there will always be another bus, another trade, another opportunity right around the corner. Patience is a superpower in trading. Third, practice mindfulness and emotional awareness. Before you place a trade, take a moment to check in with yourself. Ask, am I feeling anxious? Am I feeling greedy? Am I making this decision based on my plan or based on a fear of missing out? If you recognize that FOMO is creeping in, step away from the screen. Go for a walk. Get a glass of water. Do some deep breathing. Creating a physical and mental separation from the charts can break the emotional spell and allow your logical mind to regain control. Some traders even find it helpful to meditate for a few minutes before their trading session to start with a calm, clear mind. Fourth, limit your exposure to market noise. Unfollow the social media accounts that are constantly hyping up stocks with rocket emojis and to the moon rhetoric. Turn off the 24/7 financial news channels that thrive on creating a sense of urgency and panic. This constant stream of information is designed to trigger your emotional responses. Focus instead on your own research, your own charts, and your own plan. Curate your information diet to include high quality, objective analysis rather than hype and speculation. Finally, keep a detailed trading journal. This is non-negotiable. For every trade you take, record your reasons for entry, your exit, the outcome, and most importantly, your emotional state at the time. When you have a losing trade, go back and analyze it. Were you following your plan, or did you give in to FOMO? Seeing a pattern of FOMO-driven losses written down in black and white is a powerful wake-up call. Your journal becomes your personal coach, highlighting your weaknesses and reinforcing your strengths. It provides the objective feedback you need to grow as a trader and build the discipline required to keep FOMO at bay. In conclusion, FOMO is a natural human emotion. But in the trading arena, it's a financial predator waiting to pounce on the undisciplined. By understanding its psychological roots, recognizing its dangers, and actively implementing strategies like creating a strict trading plan, accepting missed opportunities, practicing mindfulness, limiting noise, and keeping a journal, you can tame this beast. You can shift from being a reactive, emotional gambler to a proactive, disciplined trader. The path to consistent profitability isn't about finding the next hot stock. It's about mastering yourself. Thank you so much for watching. If you found this helpful, please hit that like button and subscribe for more content on trading psychology and strategy. Let me know in the comments if you've ever struggled with FOMO and what strategies have helped you. See you in the next video.